Well, thank you, David, and it's always a pleasure to follow John. He always brings the bigger audiences to me. But I wanted to spend a little something a little different today. I've really never talked about this except for with my clients, those that I guide to be funded and paid in their prop trading accounts. As of late, it's been my focus for the last 4 or 5 years in the prop trading. So but one thing that I've noticed that I really don't talk about, and I should, are a couple of the moving averages that we use. And I'm calling this, even though the presentation is about how not to blow out your funded account, I'm going right in the middle. I'm going to focus on what I call the dance of the moving averages, using these two dance partners to enter trades. Now, I can talk about the dance partners because I actually worked for Arthur Murray Dance Studio. I don't think that David even knows this. I worked for the Arthur Murray Dance Studio. I sold the first lessons, the 12 package lessons, and I would teach the cha-cha, and I would always say, "Are you sure you don't have any Hispanic heritage? Because the way you're moving, that would always close the 12 lessons." I didn't get very far with that career, but I do remember being a dance partner to many. Still love dancing. They always call me at the weddings. In any event, let's get to it. I'll show you how these moving averages dance. But first, know that futures trading is risky, can result in substantial loss. Only risk capital should be considered. Further, past performance is not indicative of future results. I'm going to show you, of course, somewhere down the line, a few testimonials, but it's their testimonials. If doesn't mean it's going to happen to you. It can. It shows you that it can, and that it really maybe shows you that it should if you're good at following rules. And if there's the mental and emotional part, we can help you with that too. In fact, within our trading plan, I've built some of the mental and emotional solutions that most traders have really enjoyed. I went to the University of Cincinnati, graduated with a couple of math degrees, and then about 4 years later, I found myself running one of the largest option firms in the country. At that time in San Mateo, California, and right south of San Francisco. And this room looked a lot like it. It's not an exact picture, but it's very similar. Had 63 professional traders under me that I was responsible for their professional outcomes. They were trading other people's money. They weren't funds, but they were separate accounts. These were brokers, brokers essentially, but really a commodity. Most of them were commodity trading advisors at the time. When they had a problem, when I noticed that they weren't doing the kind of job that the firm wanted them to do as far as results in client accounts, they would come into my office, and almost to the man, and of the 63, there were 61 men and 2 women. The women were always at the top, it seemed, or close to it. But the issue was too complicated a trading plan, too many hoops to jump, too many things to consider before taking action. You have to be a certain amount of quick and decisive when you trade. And if you have the basic, if you have a tested system where a few indicators, I'm going to show you one of our charts in a second, a couple of them, that's really all you need. And so I would take out my red pen, and they would go back to their desk and do a little bit better job most of the time. So simplicity, very important in trading plans. I then worked for Payne Weber. They bought out my contract with the option firm. I was a commodity trading advisor, ran millions of dollars for them in separate accounts. I was trading separate accounts. It was not a fund. And did very well with them. At that time, they were paying, I think they still do, 20% of the profit that I made on the money that I was trading. And so I had some pretty good years there, very good years. The problem was there was a lot of selling involved in the evenings and Saturdays, and which was part of their rules. So I was only with them a couple of years. But those were some big years. And when you think of prop trading, the fact that they will pay you 90% of the money that you make that to me was, I think it's the best thing that's happened to the retail traders since the advent of exchange traded options or the micro contracts. But it's big, and you can see how prop firms are exploding. But PaineWebber was an important experience for me. And so I left PaineWebber in the 1990s, formed my own IB, and was trading separate accounts there, some of my clients from PaineWebber. And also, I started, I wrote several books on trading plans during, I mentioned that was what I was doing a lot of when I was with the option firm and, of course, with PaineWebber. Still do it for institutional, for professional traders that come to me that still know me, that are still alive. Books have been written about me. Some of the things that I've said, I can be inspirational when I want to be. And but in 2000, I formed a Disciplined Trader, and that's where I concentrated really for almost 20 years solely on helping traders with the mental and emotional piece, which is the missing piece for the vast majority of traders. And 5 years ago, or 4 or 5 years ago, I started really with the prop trading and started with focusing on helping traders, especially those that normally would not be able to trade 50, 100, $1 million. Why trade a 50 or 100 or $10,000 account when you can prop trade and make 90% of the profit? So that's what I've been doing, helping traders. And today we're going to talk about the funded phase. There are some kind of tricks and things that you can do in the evaluation stage in many of these firms. I work with Top Step and Apex. Most of my accounts are with Apex. And everybody has their shtick as far as the evaluation stage. But it's the funded phase where you really want to get to quickly. And when you do, and you can, there are ways to do that. Now it's time to get very serious about your trading. Okay, here's where you can make a lot of money. So the problem is that red line where you're, again, I guess these are some of the papers that I've written for magazines and just about everyone. But you may know me from the 4-minute drill for traders, of which I did 200 of them, over that 206. 4 years, every Saturday, I did a 4-minute drill for traders where I'm talking to you just like I'm going to today, very directly, because unless you're given the truth about what happens in trading, you're not going to get very far. All right, here's some overall recognition, and that is, as we move through this presentation, we'll be recognizing the importance of the mental and emotional aspect of trading. The specific techniques I give you here will be laced with the understanding that without mental and emotional control, well, without spelling correctly, mental and emotional control, you're not going to succeed as a prop trader or any kind of trader. Okay, and at the conclusion of this presentation, I'm going to give you a special offer that because you spent your time with me today, and I really want to help you. My wife says, you know, we're helpers, so we're never going to be out of this. Let's do it. Let's keep helping. And that's what we love to do, and we've been doing it together for years. My wife is in charge of the mental part of what we do with traders. She's one of the top subconscious trainers in the world, and recognized as such. We'll talk about her at a second presentation, but the offer that I'm going to make to you, I've never seen anybody do it before. I think because they're afraid to make an offer like I'm going to make. So stick around, and I'll show you what that is if you stay with me. All right, let's start at the end, because again, from the mental and emotional standpoint, when you're in the funded phase, that's not the goal. The goal is to get that. We're going to talk about a $50,000 account because that's where most traders start, and I believe multiple $50,000 accounts is where many of us should end up. Different for different people, and in part of my offer, I'm going to have a one-on-one conference with you, many of them if you'd like, and I'm going to figure out from your answering my question what's best for you. But most, let's say a good 75%, I always recommend, and I have them. This is what I do. My primarily $50,000 accounts, but you have to be able to, you know, the end result is not being a funded account. Now, if you've been struggling to get a funded account and you get a funded account, that's something to clap about and celebrate. But you can't stop there with your learning and your enthusiasm about. You've got to, what you want to do is get that 50,000 out to about 60,000 or 70,000. This way, you're far away from that red line, and I'm going to talk about that right now. When you're in a $50,000 funded account, all you got to do is get to 52.6 before you can start asking for money. But when you're at 52.6, the red line, that bust out line, and if you're a prop trader, you know what I'm talking about, that follows you, stops at 50,100. Why they picked that number, I don't know, but 50,100, that's where it is when you're at 52.6. Okay, so 50,000, when you've got a $2,500 give. So the red line is at 50,100. You're at 52.6, where you can start getting paid. You've built the 50 to 52.6. So there's a $2,500 give there. It's not a lot to be comfortable with. You got to get it out to bigger numbers between you and that red line, because the great thing about the funded phase is that this 50,100 does not move. Okay, so when you build the 50,000 to 60,000, now with that red line at 50,100, now the distance between your bust out, where you got to go back to the evaluation stage, is now 9,900. And when you really start learning what you want to, if you're looking to do this as a business, you really want to be in that 65, 70, 75 area. Kind of trade conservatively. You can open it up a little as you go, but still be very conscious of the loss that you're taking in each trade. In this phase, I never take a loss greater than $250 on any trade. And when I say trade, I mean you can have 5 micros that you put on when you get the trigger. That would be a trade, the 5 micros, not each individual contract in a position. Okay, so at 75,000, the line still stays at 50. You've got almost $25,000. Now you can start trading like a human being, and not a human being, but you can take the professional rules that they force on you. Those that complain, oh, that red line keeps following. Why do they count open trade equity against me as they do? Why do they do that? If I have $1,000 gain and I go back to break even, yes, my equity stays the same, but they count that $1,000 against you toward the red line. That's not fair. It is fair, because if you did that in my room, you'd be gone. I give you one chance never to do that again. You cannot let go of $1,000 gain in a $50,000 account. You can't just take 2% and let it dissipate. So the rules are there to help you to be a more professional trader, or to act like a professional trader. Okay, let's get into some of I'm going to give you the challenges here in the funded phase, and I'm going to show you how to overcome those challenges so that you can get on to getting paid and really vision, because this is really where you want to spend your time thinking. This is where you're heading, not to be funded, but you're heading for that $25,000 of room between you and the $50,000 and 50,100 red line, okay? Because then you can really start chugging along in a response. You can take a vacation and still take out $5,000 because you saw a nice painting that you liked at the Louvre. The red line, it's kind of a true story, but not any of the ones they had hanging, of course. The overall drawdown limit is that red line that we talked about. Now, the issue is that tight drawdown limit, 5% off the equity high that I've talked about, that $2,500 give that you have on a $50,000 account, you can't breach 47.5. Okay, I think I've explained that to you. Now, as you're working towards your goal of a profit of 2,600 in your equity to get to that 52.6, so you can start taking out money, as you're working toward that in a $50,000 account, the closer you get to the red line, the more stressful your trading becomes, often pulling you off your plan. We have a tested, proven plan in the loaded gun. I'm sure you've heard about it. Again, I'm going to give you a special offer for it. But the idea here is that if you've got a trading plan that you know works, the more you back up to that red line, the more you're going to want to get away from it and start doing some stupid things. Okay, some not stupid, but unwarranted things. Okay. All right. The solution is every trade should include scalping in part or whole. Now, that may offend some of you. I know it offended me when I first started testing various systems that I created along the way. With prop trading and dealing with their rules. But I quickly realized that taking the low-hanging fruit, I've never been a scalper. Now I am, to some degree. This is the way I'm going to explain to you what I mean in a second, but when every trade should include scalping in part or whole, because that's the low-hanging fruit. When you grab a scalp and you're using a limit order, I want you to use a limit order. So when the market is heading toward you, hits your limit, you're taking that chunk and you're padding your distance from the red line. Again, the idea here is to stay away from that red line so you don't do something off the plan, okay? Because it's the mental part that's going to hurt you and is probably hurting you now. So if you include scalping in part or whole, you're going to have part of what you do, an important part of what you do, to recognizing padding your distance from the red line. And the less you ask from a trade, if you think about it, once you put on a trade, the less you ask from a trade on initiation, the more likely will be a favorable outcome. Okay? It's true in life. I mean, when you go out on a date with somebody that you want to have a more intimate relationship with, you can't invite them to the bedroom on the first date. A kiss would be good. A handshake for some of you more conservative people. If you can get to the kiss, that can bring that red line, the bedroom red line, a little bit closer to you, kind of in an opposite way of what I'm saying here, but you understand what I'm saying. You have to, the scalping is the kiss, okay? You want to continue to pad your way to the prize, okay? Bad example, but I won Biggest Flirt in high school, so I can't get it out of my head. Okay. Each success, I've been married 44 years also, so don't say this guy's a creep. Each successful scalp, you're never going to invite me back, David. That's okay. Each successful scalp pads the distance between your balance and the red line. So you want to use, and here it is, the scalp runner combination upon the execution of a trade, or use the scalping exclusively. I never take any more than $250 risk on any trade in a $50,000 account in the funded phase. So if you're in the funded phase and you have a $50,000 account, I don't want you to take any more than $250 risk on any trade that you take, okay? So if I'm using the scalp runner combination and I have a high probability trigger, then boom, I'm taking my scalp and then I'm moving my stop to break even on the remaining position. In this example, I'm taking on 2 contracts. I take one on a scalp. I leave the other one on with a break even stop, and now I'm allowing the runner to run. Listen, I don't care who you are. If we have a couple of drinks, you're going to admit to me that you really want to be there for a runner. You know, it's not a. Listen, you really want that $500,000, $2,000. You know, if it happens, you really want to be there, especially if you were in it. Why? You know, yes, you got to get out because you need that scalp. You need to pad, but you want to be there for a runner. It's what makes all of this exciting. You know, and maybe people have given away the excitement. I haven't. I get excited every time something really starts to expand, and I'm sure you do too. You don't want to take that away from yourself. So a scalp runner, put the safety in, create the safety, put a break even on, and then go for it. Okay. So the challenge in connection with that, the challenge in the funded phase now is to now identify a set of frequent, reliable triggers. If the trigger is that important, and the trigger is important because you want to take that scalp, because the scalp is important, and then you want the runner, okay? So to identify a set of frequent, reliable triggers, you need a couple of them, at least 2 or 3. So the issue is, in this case, in order to keep the reward to risk ratio in line, a reliable trigger, one that gives you a pop, one that when you put on, it moves within the first couple of candles after you've entered. One that gives you a pop in your direction upon application, at least 2/3 of the time is needed. A pop means one that moves in your direction within the first few candles, okay? So you want a frequent trigger, okay? A reliable trigger, one that you can rely on to give you a pop. And you want it to be frequent because, meaning that the trigger appears often enough not to challenge your patience as you wait for it to occur. So again, patience, this is a mental thing. And I mentioned the first 20 plus years, we did nothing but help traders with the mental part. I would say that many of the years, the dominant issue was patience. I was waiting and waiting. I saw something was kind of like it. I only have an hour to trade. I'm going to take it. You cannot compromise your tested trading plan. Okay. And patience, when you stretch your patience, this is what can occur. The mistakes can occur. So you need a frequent one that happens enough of the time so that you don't press your patience, and you need reliable one. I mean reliable, I mean one that gives you a pop 2/3 of the time upon application. We have 2 of them. We actually are about to have 3 of them. It's still in the testing phase, but we have the solution is to have at least 2 A+ triggers, 3 or better, that have been tested thoroughly to meet that frequent and reliable standard. If you trade a single market, changing time frames to expose more triggers. For example, 2 short candles can combine to 1 long enough to identify a trigger. This is one way to keep the frequency even more. In other words, if you want to increase the frequency, why not? You start to, if you know what your trigger looks like, okay, and you know that if you can combine two of those 2-minute candles, you're combining a little bit more. You go to a 2 to a 5. All of a sudden, it gives you the trigger that you want. So by separating, by going to a shorter time frame or a longer time frame, you can expose more triggers. I need to talk to you more about that, but I just wanted to kind of bring that up for experienced trader. Or you can do what I do. I look at 6 markets at a time, and the reason I do is because our trigger is very easily recognizable. Okay, I'm going to show you a couple of charts in a second, but the idea here is that I can tell, is because it's a 2-part trigger. When I see that first part, then I can stop the music and look for that second part of the trigger to develop. And so I can look at many different markets. Why do I want to do that? Because the more triggers I can expose, the more trades I can be in, the more I can offset that patience thing that can creep up on you if you don't have techniques in order to be more frequent, but always reliable. Okay, so you need that frequent, reliable trigger. This is what our chart looks like. You know, it's very simple. I'm going to show you the dancing in a second, but you can see this is a government report. This is a silver chart, but this is what one of our triggers looks like. And you can see when I see a doji, I look for a movement. This is the 8-bar exponential moving average. And you can see, you see the size of this candle? The size of this body is what dictates to me how much I should ask for in a trigger. The bigger the body, the bigger the body, the more I ask for. Okay, and you can see what happens when you get a big body and more of a trigger. So I'm not going to describe or really expose exactly what the trigger is, but you can see where the triggers are pointed to. We can see the follow through. Now this is a trigger that didn't have follow through, but we also have a rule about waiting for something to happen. I won't wait more than a certain number of candles, but I just wanted to show you what a simple chart looks like. You see down here the RSI? I haven't looked at the RSI yesterday or today in any of my trading. Even though it's there, in other words, it's important, but not to whether I take a trade or not. It's for position sizing. So I have a whole shtick on position sizing that's important. But I wanted to show you this. This right here is today. I chopped this off of today's. I didn't want to, I didn't want to, what do they call it? Cherry pick. This is today's chart. I'm going to, and I stopped here right before I came on. I got the rest of this chart. This was up till about 9 o'clock today, 9:30. Okay, this is today's night chart. But I want to show you the dance of the two. This is something that we like to use. This is the 34 EMA. I like it because it's Fibonacci. If you ever use Fibonacci, use the retracements. I used it for years, and I've had some success with it, but it never quite hits the 3.8 and the 0.62, 0.6, never quite hits there. And you wonder, is this a real? So I use it in the form of this 34 EMA. To me, it's a backstop. What I want is the shorter moving average, which is this is the 8. What I want is the shorter moving average below the longer moving average. I want the 8 below the 34 if I'm going to take a short trade. I don't take long trades going into the 34. I'm taking the trade based on what happens with the 8, but I won't take it if I'm limited in where I can go with the 34. That's all I'll say. But rather than saying what I won't do, let me tell you what I would do. When you see this is a signal that we like. This is an accumulation right here. And this is what I call a squeeze. This is the dance. When you squeeze your partner, let's do the um, the Argentine tango, where we have our foot going between our partner's legs just for a second, and flipping in and out. That's these things going on. So this is the dance. What a lousy explanation. But here is the 8-bar, and I'm looking for a break there. I got my break. I'm in. So I'm short here. I'm putting my stop probably up here. There's places that I train you to put your stop in responsible places. But in this kind of accumulation, it's probably a good idea. But the fact when I have a shorter moving average below the longer moving average, this makes, now everybody knows the 50 and the 200, the golden whatever, golden cross, or the slam dunk, or whatever it calls when it's negative. Um, you want the 8 below the, in this case, the 34, and we can use some other ones, but this is my example to you. But look what happens. My scalp would be taken right in here, and then I would move my stop to break even. I get in immediately after the close of this candle, of the entry candle. But look what happens here. I'm not going to talk about how to get out right now. I just want to show you entrance. It's very important where to get out, but it's too long a discussion. We have some simple ways, just like I'm explaining a simple way here. Now look at here. Here's a crossing of the two. It's not just a cross. Sometimes you can have a cross and get hurt. I wouldn't be in this trade. Why? Because you see the 8 is above the 34. Not interested. Here we have the crossing. It's a little bit more dangerous at the cross. Here's another cross, okay, with the 8 above the 34 afterwards. But you know, these are the better ones right here, I think, even though these all turned out, because I like to have the 8 above the 34 when I take the trade. This is a beautiful trade. This would be a maximum exposure to me. Why? Because I have the squeeze here, and of course the ultimate squeeze is the cross. But I didn't want this to be an example of the cross. The other part of this is that when you get too far away, when there's too much distance between the two, and I'll give you another rule in prop trading. Here's one that we would have been in on, and many people are scared of this body. The longer the body is on almost any valid system, the more possibility you'll have for extension. So I invite these long trades, these long bars to get into. In any event, when you get a spike, when you're this far away, you know there's going to be a rejoining of the two. Eventually it happened here. But you can't, and I won't explain why, but if you think about the moving average, a longer moving average is a smoother line. This is more of the current, the 8-bar in this case. It's just more of the Today Show. And when the Today Show happens further from, it's like when you see a batter having, batting 400 in the beginning of the year, you know he's going to come down to his normal career average, as Judge is doing right now. But when you see this, when you see a spike after this distance, you got to be looking to get out. And if you didn't get out at the spike, once this thing turned red, you'd be getting out. I said I wouldn't say anything about how to get out, but what are you doing here? From a prop trading version, you're putting all of this distance between you and the red line, and probably put you right back up to 2,500 if you took some losses. So all I'm saying is that the dance, you want to look for the squeezes like this. Let's look at this one. Well, here is the first one that I saw, the second one that I saw, the third one that I saw, and this is another one that I like. This is not the kind of squeeze, but when you see them coming back to the squeeze, this is not a big squeeze like these. But when you see it accumulating like this and the moving averages come together, when you see another signal of which this is, you take it because it's a continuation of the trend, and this bar would give me a nice scalp right here. So you would have gotten your scalp too. Scalps are highly reliable, remember, so you need the trigger. It looks like an identifiable trigger, but you've got to see it in the right place. So don't go just taking. In this particular case, this was a crossing, squeeze. This was a continuation, and I can show you that too. But again, this is talking about the frequent reliable trigger. Here is a continuation of that. I did this right before I came. So this is like 12:30 or 12 o'clock. But look right here. Look at this squeeze. Look at this squeeze. Boom. You had all of this. Now, you have some squeezes here. Here's one that I would have taken lost, okay? But you're not going to win every trade. This is not one that I wouldn't take for various reasons. Another one, you see the 8 is below the 34. The cross happens afterwards, wouldn't take. Here is a beautiful signal. Why? Because the extension is coming after a squeeze, and you would have gotten your scalp. You're in here, and you would have gotten your scalp. Okay, so this is a system that I have created for prop trading that just works. Okay, wanted to show you some charts. I hope I didn't confuse you too much because I gave you enough to be dangerous. Don't take what I've just shown you and just start trading every cross because you'll get chopped up. You've got to understand the history, how you got there, and so on. But I wanted to show you what a frequent, reliable trigger looks like. All right, here's the prop trading challenge number 3. And this is, people don't talk about this, but if you're in a funded trade, a funded account, and you get close to what I call the green line, where you actually start getting paid, you get close to that, in this particular case, 52.6. And you're at 5,200 or 52 and 100, you start getting a little bit nervous. Okay, so the issue is when the account balance gets near the finish line, nerves increase, leading to being too careful, causing hesitation and mistakes. Okay, and the solution is I like to trade 2 accounts at the same time and be a little bit more aggressive with one than another. Be very conservative with one and just regularly conservative with another. Now, you can trade the same contract using different contract sizes. Maybe you'll take on 3 micros in one and 2 micros in the other. Or you can take 2 different contracts, and a mini and a micro, or you can trade one. You can take 3 micros in one and take 2 euro dollars in another. So you can take 2 different signals, but if you're trading 2 at the same time, it takes the pressure off one being successful and the other, and taking the pressure off allows you to be more successful with both. I think you're going to realize that when you see it happening. A positive result in both accounts will break one through. A negative account will keep, even though you may have put on the same direction in both, but put on stronger in one and then another, more contracts. If you have a positive result, you'll break through with the stronger one. A negative result, you'll keep closer with the lesser contract than the other. So you're managing your situation. This is, I find, the best way to do it. So you want to adjust your trading plan to match who you are, your emotional truths. In addition to training your subconscious mind to strengthen your weaknesses and emphasize your strengths. You actually want to neutralize your weakness, really, is what it amounts to. You may never be a patient person, but you don't want it to hurt you. Okay, so you can be patient enough so that you emphasize your strength because you're fast on the trigger, because you're very good at recognizing a situation when it comes. So you emphasize your strength and then neutralize your weaknesses. We can show you how to do that through your trading, but also you really should be training your subconscious mind, and we do that if you ever need it. Okay. Again, I cannot help but lace in the mental part, and I think you probably know why if you've been a struggling trader. All right, I want you to consider these futures contracts before I show you my offer today. These futures contracts are ones that you may not recognize. First one you will. The micro, NQ, and ES, very flexible in their exposure, but can add up a bit with round turn fees. You don't want to let that stop you. If you're going to take on 10, if you're going to take on 10 of these micros, that can start to add up. Not that you should be taking a full micro NQ, but be careful about that. There are some better contracts that when you start wanting to go big, and be careful with, somehow there's an attraction to the NQ, and I think most traders until you get out there in that $60,000 level should really be trading the ES and not the NQ. It moves a little bit more slowly. It allows you to do the right thing more of the time without making mistakes. Again, the mental part. I'm not trying to slow your success down, because it won't do that if you trade properly with position sizing, but it will give you a little bit more time. The NQ can move frantically from time to time and can do some things, damage to a new trader especially. If you're experienced, okay, I got no problem with that. But if you've been struggling, stick to the ES. Okay. Here's something that most traders somehow ignore. And John talked about this. Talked about us having to trade forex in the old days. But the euro dollar and the Japanese yen in the in NinjaTrader, it's 6E and 6J. The full contracts, even with 100 points in either one, is only $125. So move from 110.6 in the euro dollar to 110.7 is $125. It's not a huge move, but it's a nice size move, but not exorbitant, and gives you a nice 125, which is a nice number to be. You can take on 2 contracts and still be in that $250 maximum loss. In fact, different basis for each gives different exposure. What I mean by that is that the basis of the euro dollar is $1.10 against the US dollar. They're both traded against the US dollar. The Japanese yen is more like 65 cents. So a 2% move in the Japanese yen is only half the punch in dollar forms than the same percentage move, but a different punch. I think you know what I'm trying to say. So I like to trade the Japanese yen. I like to take multiple contracts in the Japanese yen because did I mention that the currencies tend to trend, and I really like to be able to do that. I like that runner to ride that 8 and give me a nice trend. So the idea here is to consider the FX contract, or the euro and the Japanese contract, and also the mini crude oil. There's a micro crude oil, I believe, but I like the mini, which is a half crude contract, really nice size. You got 2 half contracts of crude oil. In so many cases, you can apply and get a nice quick scalp. It tends to pop the crude oil, and so when you get your trigger, you get that pop even more often than other commodities, even more than that 65%. I've never tested it, but my guess is that it's at least that and more, where you get the pop enough to take your scalp. You get a nice quick scalp, and then have the other half to one. And then I say crude runs also. You've seen crude running. So that's a really nice contract. And the other one I didn't want to ignore is the micro gold. If you're just starting out trading, gold is a very nice contract. It's a micro contract. It's only 1/10 of the full contract. Full contract is 100. We're talking about $10 for a dollar move. So when the day that you see gold is up $20, micro is $200 in a gain if you happen to be in that run. So it's a good way to be in the action. You want to be in contracts that are active. It's a good way to be in the active contract and not expose yourself to a whole lot of risk, especially for new traders. I point them usually to the micro ES and into the micro gold. So that's what I have to say about all of this. That shows you a little bit of the dance, showed you some of the ways that you can get your mind straight in order to make it happen. I'm gonna look at the chat real fast to see if there's any good entry signal in combination with your moving averages is when zero line RSI take it a good angle. I don't even look at the RSI, but yes, I think you can Frankenstein even my system a bit, as long as you don't. I'll work with you and tell you whether it's a good Frankenstein. But generally, I do look at the RSI, but only for position sizing. Okay, it's not a reason to take a trade or not take a trade. And so let's see if there's any other comments here, and then I will give you what I got here. Okay, let me show you what I've got that you haven't seen before, and I don't think anybody's willing to offer it. This is for passing the prop trading evaluation, passing it and then getting paid, getting funded and getting paid. It's the loaded gun simple trading plan. I'll show you how simple the chart looks. And we don't even use the 34 some of the time. Again, the original loaded gun signal just had the golden moving average, the 8. Sometimes we use the 9. It depends. And again, we can discuss that with your trading acumen and who you are as a trader. And I'll show you how we can do that in a second. But there are 2 basic videos in this, and very simple to make happen. both videos that showed you the entire plan is only an hour and a half long, and that includes all of the example charts. So it's a very simple. I'll just show you example after example after example. So you get the loaded gun trading plan, fits on one sheet of paper, the entry rules, the exit rules. I give you all the nuances. I haven't called them nuances, but I've mentioned a couple of the 7 that we have now. There are slight changes that you can make in the core trading plan to take the pressure off or to fit who you are. In other words, some traders like to be a little bit more cautious. Some like to be a little bit more aggressive. And I can show you some tweaks to the trading plan that won't add significant risk, but fit you. And the importance of that is that the more a trading plan fits you, the more you won't jump off it. Because most people lose because they cannot stick with their trading plan. So these nuances are something that I invented about 20 years ago. I've never seen anybody do it because I don't think they have the same emphasis on the mental game that I have. They may not have produced as many successful traders as I have because of that. But the idea here is that the nuances are very important to matching you with the trading plan, even mine. And then we have monthly get-togethers every month. The last Wednesday of the month, which is a week from tomorrow, we meet and I give you updates on the plan, some things that I'm testing. I'm now testing a way that you don't have to be in front of the screen in prop trading. That's a tough thing to do, and I've got a couple of things I'm testing. Very close to one, but not yet ready to expose. That's the kind of things that I talk about. We talk about our experiences. A new person may have some questions. And there are some very, very experienced professional traders that run loaded gun as I do. And we help the newbies when we can in this meeting. And if you're not going to be there, you can email me the questions you want me to answer, and I'll answer them during the meeting. And you get the recording. I think there's 35 or 40 of them right now that you can review. I want to give you this bonus. I give it whenever I've been doing it for years on this because it's very important for me to know who you are so that I can match you with the plan's increments or nuances and so on. I'm going to give you 90 days of unlimited one-on-one coaching with me. That means you and I will meet in our boxes. Now, the truth is, most traders meet me once or twice. Newbie maybe meet me more than that, 4 or 5. I've had people meet me every other week for 90 days. It's up to you, okay? But the idea is that I can get most of these meetings. The first one's going to last a half hour or so. Most of them last 15 minutes or a half hour. First one's going to be a little bit longer, up to even an hour, because I want to know who you are. I want to do that matching with you. But you'll have looked at all of the videos before, and then you'll have looked at the core. You'll see the nuances. You'll see a couple of the get-togethers, and then you'll meet with me. You have a basic understanding, but you have some questions. Let's talk about it, and let me help you match the system to you. And the good thing about this is that the 90 days doesn't start until our first meeting. So if you're taking a vacation this afternoon after my presentation and you want to do this, but you don't want to spend 90 days, you're not going to spend it. You're going to come back from vacation in 2 weeks or a month. You're going to look at the videos. You're going to look at videos while you're in the chair with the umbrella at the beach. Kind of learn about it when your partner tells you to stop looking at the computer. You're going to look at it and you're going to learn a little bit about it. And then when you get back on September 1st, you're going to go to my calendar and make your first meeting. That first meeting starts the 90 days. Okay, it's just important. So don't worry about grabbing the limited number. There's 10 I have available now. I did a similar presentation at 365 at a recent thing that sold many of them, and I've always left some for this big presentation here with David, and so I've left 10 here for you. I've divided them for you, so don't hesitate if you want to grab it. All right, so here is I'm going to be with you every step of the way. I want to meet you. I run that room. You're going to listen whenever you get a room. Those 63 people, 65 people I talked about, actually 63. There's always 2 jokers. Two really conservative people, one you can't shut up, one you can't get to talk. In every crowd, I'm going to identify who you are, okay? And then I'm going to show you how you can take your personality without changing it and matching it to the system in a way that's responsible for you. I don't know anybody that does it, because I don't think they're capable of doing it. And I'm not saying they're not capable of training you to be a successful trader, but your quickest way to success is making sure your mind is right. Okay. I'm also going to give you a month of access in our new trading room. It's been around for the last couple of months now. Actually, it started in May, June, July. So this is a third month. And I say new because I've never found a person that I trusted to do it. Well, I found somebody to do it. The trading room runs Monday and Wednesday mornings and Tuesday and Thursday afternoons. And here he is, Dan DeMaria. He was a former independent floor trader. He's a member of the CBOT. He was mayor of Morton Grove, Illinois for 12 years. They named a street after him. This guy, you can't be the mayor of a city and not be a helper. This guy helps people. I consider myself a helper. This guy is the same. He runs the room for the disciplined trader. His son, who's in his mid-20s, he and his son run this. It's fun, and his son is just taking money out of prop trading. And I wanted you to see that it doesn't matter what age you are, you can be taking money from prop trading. When you see Matt and you see his father Dan, they're running the trading room. There's no other trading room like it. That's why it's becoming more and more popular. But I'm going to give you a month in the trading room. After that, it's going to be $99 if you want to stay. But I'm giving you a month in the trading room. Not so much to learn the system. That's what's going to be. But the important part, I believe, of a trading room, especially in the beginning, especially if you've been struggling, especially if you've been losing, is to see somebody winning almost on a daily basis. Dan and his son, Matt, they win almost on a day. They'll go a whole week without a losing day. They'll go a couple of days without a losing trade. These guys, Matt and his father, they kind of check and balance each other while you're watching. You've never seen a dynamic like this, but I want to show you that if you have a valid system, that you can win, because you've been trained up to this point to think about tomorrow's going to be a struggle. And will this work? No one's selling me something else. Will it? I want to show you. That's the importance of this room. Now, when after a couple of months in the room, I want you to, so if you go 3 or 4 times a week, go 2 times a week and go on your own. Nothing is, a year from now, Matt can say, I don't want to do this anymore. I don't know what's going to happen. People change. Okay. So I'm saying to you that learn how to do it on your own, but see that people succeed. A professional trader succeeds, and you have to see yourself as an athlete, as a professional trader, that you're in training. See that it happens. And then you can vision yourself as being part of that. Okay, maybe you're taking the trades and you're actually winning in your account, but that's not the important part. The important part is seeing that this is a winning thing to do, this whole prop trading thing, not a struggle thing. That's the importance of the room. After 2 or 3 months, go only a day or 2 and trade on your own for 2 or 3 days. And then after a while, don't go to the room at all. Trade on your own successfully and have the room as an insurance policy. Okay, that's the way to do it. I mean, I pay for insurance all the time. I need it if I got it. If I have a weak moment, I'm back to the trading room. That's what you should be doing. Okay, so and here's somebody, Phil, who said, I recently joined the Loaded Gun Trading Room. It's been unbelievable. Dan and Matt, a father and son duo, provide clear signals, trading signals, explain their strategy with clarity and patience. It's refreshing and incredibly valuable. I'm giving you a month in the room. Besides giving you the 90 days with me, I want you to succeed. Dan and I are succeeding. Matt is succeeding. Phil is succeeding. I want you to be next. Okay. So, and here's a third bonus. It's a vanishing bonus. It's only for people who take advantage of this today. And I'm not kidding, because this is a session with my wife. This is a session with the person who runs our entire mental and emotional part of what we do. I'm giving you a private session with Tisha to eliminate the primary mental and emotional issue that's causing you to be your own worst enemy when you trade. Okay, there's a picture of her. We just had our 44th anniversary last week. So thank you. Thank you very much. I know you're clapping. And the key is, you're right. That's what you say to your significant other. She says it to me. I say it to her. We never let the heat come up when we have difference of opinion. You're right. One of us gives up. Okay. So if you have the fear of losing, lack of patience to wait for your ideal setup, revenge trading. That was the big one the last couple of years. That is the big one right now. Hesitation to pull the trigger, overcoming fear and greed. Tisha will work with you to eliminate your major fear. She will identify, it's a 50-minute meeting, let's call it an hour, with her, and she will quiz you to come to the truth about why this is happening to you. This is only for those people who act today on this. It's a vanishing bonus. I'm giving this to you. This is a $500 bonus. Actually, we charge $200 for our clients that are in our programs, but $500 for institutions. And to be fair, usually the company pays for half and the broker pays for half, the professional. But Tisha is known in the industry for this. You get an hour with her. Okay, and so I want you to take advantage. If this looks good, do it now, because the vanishing, but it's only for today. Okay, so here's somebody here's Ernie who said, and this is recently, just have to tell you how very pleased I am with the loaded gun strategy. It's brilliant simplicity and effectiveness. While I was watching a training video yesterday, I had a NinjaTrader chart pen to another monitor and literally saw the loaded gun setup form and produce winners. Today, I utilized the strategy in my Apex account, made over $1,000 across 3 of our accounts, and I had an 83% win rate. I'm not big on trading, being a frequent. I think you got to wait for the right ones, but 83% is great if you're going to trade frequently, okay? I'm about halfway through the nuance videos. He hasn't even finished the videos because I'm very basic in what I do, even though there's a twist to what I do, which makes it different. Once I finish those, a couple of months, etc. So Ernie is a great trader. In fact, he's now in the funded phase and doing well there. Okay, hi, this is Mike, who said I passed the Apex 100 in 4 days, mostly scalping, and then he made 6,000 in 4 days in the funded phase. Sandra, who was struggling, who is already a good trader, now out of the struggle. Here's in the beginning of our relationship, credit your guidance, the voice in my head. She now has 3 funded accounts and had 2 small payouts, and 2 I advised her to just take 500 to show it's real. You know, when I first got my first $500 payout years ago, I called my bank and I asked if it was real because I couldn't believe they gave us this opportunity. Anyway, she's doing real well, and you can too. And here's somebody that I almost didn't put up, but for those people who are aggressive out there, here's somebody who tests for 5 an account, and he passed 5 and passed 5 more the next day, and the next week he made $21,000. I don't suggest this kind of aggression, but in dealing one-on-one, he runs his life aggressively. He doesn't, when he blows it out, he can create it again. They're very, very few. One in a million. I said, okay, Ken, do it your way. So here's the offer that I'm giving you: the Loaded Gun Simple Trading Plan, which is the core Loaded Gun plan, the nuances, the monthly get-togethers. I'm giving you the unlimited one-on-one coaching with me. Remember, it starts in 90 days. Also the access to the trading room, which also starts that 1 month when you register for the trading room, so you don't have to worry about that. Learn the program for a week or 2, look at the videos, and then enter the trading room and do your one-on-one coaching with me. And the vanishing, I want to give you that hour with Tisha. I call it the issue elimination session with Tisha. She'll make you a meditation, or what they call an EFT session. It's the same kind of thing they use for traumas with soldiers coming back. I'm not comparing our trauma with soldiers, but I'm saying if it works for them, it really is going to work for us. And so she'll figure out which one's the best, but you'll get the recording and you'll eliminate your main issue from a mental standpoint. I also want to give you a guarantee. I am confident that you're following the Loaded Gun Trading Plan is going to result in you getting funded by a prop firm and get paid, and risk their money, not yours. Still receive 90% of the profit you generate. Just share your trading experience with me. If you have followed the system and just showed me, even for a week, that you followed the system and you didn't make money, I will refund your money plus $500. Okay? Because I can't dig into your head. If this doesn't work because you can't follow it, that's on you. But if you follow it and it doesn't work, you show me, no problem. Never had to do it, probably never will, but I'm ready to do it if you can show me. Okay, that is my personal guarantee to you. So you have that to fall back on. So here's the offer, and this is what nobody makes: the Loaded Gun Simple Trading Plan, the core, the nuances, the monthly meetings, the one-on-one coaching for me that starts for 90 days when you start your first session, access to the trading room, okay, for a month, the vanishing bonus, your session with Tisha, all of that adds to over $5,000. But for you today, it's $13.97. But here is the kicker. Okay, not only am I cutting it by almost half, okay, about 45%, but all I want is half now and half from your profits. Half now and half from your profit. So 697, and I will never chase you for the profit. I'm not even going to think about it. I won't mention it. It's on the honor system. What I have found, I've done this now for a couple of months. What I have found is that traders willingly, not everybody, I probably never see it from half of you. I mean, that's just the way people can be. And maybe they're not there yet to, maybe you want to make your first 10,000 before you give me these 7. Look, I don't care. I don't care how you think. I just know that there's enough of you that are doing that can make this something that I can continue to offer. So just half now. And all you got to do is go to theirmoneyyourprofit.com. I'm honoring David, who spent a lot of time putting all of this together. The coupon code is David. Okay, so if you go to theirmoneyyourprofit.com, put that coupon code in, David. This $24.97 is going to say $6.97. Now remember, I want you to remember the honor system. I really would like you to be responsible. I'm never going to chase you, never going to ask for it. Okay, but I am confident that you can do this, and I'll get my other half. Okay, again, let's do this together. And again, I'm limiting it to 10 for obvious reasons. Our calendars, if I'm giving 90 days unlimited, that's going to fill, and Tish's calendar is going to fill. Calendars are one-on-ones. There's just not enough time. So I just don't want you to have to wait 3 weeks to see me because there's no room on the calendar. So this offer is good for 10 traders only. I don't have time for questions, but I will be on the chat. When you go to this page, there's a little chat. I'll man the chat. I'll put Paul aside. If there's many people, you may see Paul, but I'll be on the chat if you have any questions. David, thank you for the opportunity. Much appreciated.
All right. Yeah. Thank you, Norman.
You like my coupon code?
Oh yeah. That's
I mean, it's $1,800 coupon code. I don't give those around,
yeah,
You're worth at
that's a
least
good
that much, David.
that's oh well thank you. That's a good deal. Good to know.